Hi, everyone. Get ready for the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Thibaud de Larauze of Back Market, coming to us from Bordeaux, France. We talk about the French startup scene, the circular economy, pitching Al Gore, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who do not require a warm intro, plus 200 of the most important questions investors are going to ask you. So this is really going to help you prepare to raise capital. To get instant access, click the link in the first comment. And while you're there, please leave us a nice comment what you like about this show. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all the latest episodes. Thank you. Now sit back and enjoy the chat with Thibaud.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Thibaud de Larauze. Say your name. Just let's see how close I got to it.
Hello, my name is Thibaud de Larauze, which is obviously a French name.
All right. I came close-ish, but anyway, coming to us from Bordeaux, CEO of Back Market. How's your day going? How's Bordeaux these days?
Bordeaux is great these days. It's still very sunny, 20 degrees. It's a city very close to the ocean, which makes it very nice to live.
Great. Is the company headquartered there, or are you vacationing there or holiday?
No, it's the company new headquarters.
Great. Excellent. Nice place to. Are there a lot of startups there, or is it a startup hub?
Yeah, actually, it's booming. It's becoming like the little San Francisco in France, not to say in Europe, but it's getting one of the big hubs, and where you tend to see more and more startups coming, which is good and bad, right? Good because it's attracting more tech talents, bad because competition is increasing. So you have to raise your game.
Yeah, interesting. Cool. Well, let's jump right into it. What is Back Market? What do you guys do?
Basically, we're the first marketplace dedicated to refurbished products. Our mission is to extend the life of hardware products. And so today, Back Market is live in 17 countries across 3 regions. So in the US, obviously, but also in Europe and in Asia. And we clearly intend to disrupt the way we consume hardware products by putting more circularity within them. Today, the situation is the following. It's very linear. Manufacturers are innovating. They're producing tons of new devices every year. And so it's very bad for the environment. It's also very bad for the wallet of people. But still, many people are buying those. So we are here to say stop to that and to say that there is a good alternative to buying new products every year, which is really first to keep the product as long as possible. And then if you want to upgrade or to switch for whatever reason, go to Back Market, consumer refurbished product. You will save a lot of money, 50% at least. And you're safe. You are not betting on the quality of the product because we made all those investments in the curation of the product, and we invest a lot on the quality of the user experience.
Interesting. So it's a place to buy refurbished electronics. Can I also sell my equipment there? So is it a true two-sided market?
So this feature is going to be live in the US in January 2022. Actually, we rolled it out in France, which was our original market, let's say. And actually, we have 20% of our clients when they are purchasing their product on Back Market, they are trading in their old one. So they get a discount on the product they're purchasing. So it's the same mechanism that you can find at Apple or at the big telcos. But this is refurbished products and trading against the used product, which is way better for the circularity of it.
Interesting. Yeah. I was going to ask about that. I noticed last time I bought my Apple MacBook, they gave me the option of sending back my previous one and getting, I don't know, $600 or something for it, which I'd never noticed that as an option before. And hence I have a half a dozen old Apples sitting in my in my attic, just collecting dust because I've never really found a way to get rid of those. I thought that was kind of cool. Is that a parallel circular economy to what you're doing, or are they somehow intertwined with what you're doing?
Actually, that's feeding in the refurbished market, because once they get the product that you haven't really traded in, and hopefully you are going to do it to put it back into the circulation at some point, but that ends up being refurbished by a professional third party, not Apple, but third party company called the refurbisher. And this refurbisher will sell the product back to the market through back markets.
Oh, interesting. Got it. So when I send that computer back, it goes to refurbisher, they work on it, and then it ends up on your marketplace or something like that.
Exactly.
Where did this idea come from? What were you doing before? What was the light bulb or genius moment of coming up with this?
Well, you have to go back like 8 years ago. At my first job, I was working for a marketplace integrator. Back then, I was a sales manager. So my job was literally to help companies to sell their product through every marketplaces at the same time. So they connected to my system, and their inventory were listed everywhere. So on Amazon and Walmart and on eBay. So one feed, one API, but then access to every marketplace at the same time. And among my wallet of clients, I had that for refurbishing factories of smartphones. And I didn't know anything about that at the time. And the epiphany came when I literally visited one of those. And I figured, okay, so they are not a trading company just selling used devices. They had, the whole process is figured out like at an industrial level. So they've developed their software to check on every device's health check, basically. They have developed all the spare parts and component management to replace the used spare parts in the device they were processing. They had that white room to literally open the products to avoid the dust coming in the devices when they were doing the replacement. So I felt like, okay, this is a movie, it's like Interstellar here. And at the end of the supply chain, really the devices were looking so good. And I've seen all the processes, and I take a device in my hand and I figure, okay, this got so much more value than just a used device, and nobody knows about it. For customer, it was mostly, okay, I've got two options. So either I go buy a new product on Amazon, so I pay the full price, but I'm safe, in case of problems. I got my warranty, I got Amazon. Or I decide to go buy a used device and I go on Craigslist or eBay. And I take my chances. It's all the way around, it's a big discount, but no safety net. And so those guys, they figured a way to just create that parallel market between, new and used, getting the best combo out of the two worlds, with the price discount out of the new product, but also the safety net that you couldn't find on the used market. So I figured they found the way. Doing more with less resources, it's what's at stake in every industry, transportation, energy, but also hardware. And so I think, I thought at the time, like they found the way to go to scale circularity when it comes to hardware products, because they've made so many progress around the industrial processes to treat those devices. So let's create a one-stop shop dedicated for those products. It's going to be a marketplace dedicated to refurbished product, and I'm going to showcase to the users like, this is refurbished, this is not used, and so this is so much better than used. And so much better than new because of the price, the quality, the warranty, the safety net of the third party dedicated to it. And that was the bet at the time.
Cool. Excellent. And so that was, when did you guys start? How long ago was that?
November 2014.
Okay.
We released the platform. And we worked on it like for 8 months before launching.
Did you start just with one product like iPhones or Macs, or was it all electronics? Yeah.
No, at the beginning it was only iPhones. Because I had the trust of the refurbishing factory I was working with at my first job. I kind of pitched them the project like, hey guys, I'm going to create that distribution channel tailor-made for you. You are not going to have any investment. You're not going to need to make any investment because I'm going to be plugged to the platform I was working at. And it's going to be so much better because people are going to actually see what you provide in terms of extra value. The returns are going to be so much lower because people will know that they are purchasing a refurbished device and not a new device. And I'm going to make everything to make you scale to the next level with that platform. So we had those 4 sellers onboarding since day one, and we had I think it was 250 listing day one plugged in on the back market platform.
Cool. And now, if you're willing to share, what sort of volume are you doing? How many devices or gadgets or electronics will transact on the platform in 2021? Do you have a feel for that?
So I can't give you the numbers exactly, but at the beginning, of course, we were at 0, and now we're selling over 10,000 a day.
Oh wow! Okay, yeah, cool. That's amazing. And of course, that's just a tiny fraction of the total amount of electronics. I almost don't want to ask this question, but like, what happens to the rest of it? Is it all ended up in landfill, or is it picked apart by scavengers and somewhat recycled for the components and metals, or no?
Well, it doesn't look good in both cases, actually. So the vast majority ends up in landfills, not necessarily in the US or in Europe, but cross-border in a way that you don't like to see the pictures.
Yeah.
Some of it comes to recycling, but the way it should work is what we're trying to build with Back Market, is that the product needs to be reused as long as possible. You need to extend the life of it because the biggest problem is the CO2 emission that get produced by the manufacturing process of it. Extraction of raw materials is really costly to Earth. And so this is where the big pain is. And so once that's being done, then you need to reuse them for as long as possible. The refurbishing process itself don't create that much CO2 emission. It saves actually a lot because it's mostly handiworks from people replacing components. So the CO2 emissions are going to come from the production of the components and the logistic to get the components going to the actual facility. But that's nothing if you compare it to the production of actual brand new device. So let's reuse it all over again. Let's repair it all over again as much as possible. Today, it's very, very hard for the people to have a clear top of mind brand to go to when they want just to fix their product, right? It's not working anymore because the battery is dead or screen is broken, whatever it is. But there might be and they exist actually, those repair shops and guys with the knowledge to fix the devices. But the problem is that people don't know who they are, don't know where they stand. So we should either repair, or if you don't want the product anymore, like you've upgraded to the new MacBooks, etc., you should have a clear and smooth path to just trade in your old one all the time in a few clicks, without having even to think about that. And so that's the first step that we're trying to build and scale as much as possible. And this is why we're going to come out with that buyback program in January 2022 in the US. And then, let's make the product circulate as much as possible and being repaired as much as possible. At some point, people are not going to want it, or worst, iOS or exploitation system are not going to be maintained by the manufacturers on those products. So we should insert the repurpose on those devices. Maybe we need to join forces with the FTC, the right to repair. Like, let's free those products from what they've been designed for in the first place. I'm pretty sure my old iPhone 3 could be still a great web camera or a TV control for my TV. There is Wi-Fi, there is Bluetooth, there is everything within it to make it work as an IoT device. And then when there is really no more need for it, let's put it to recycling. Extract the raw material and go back again. But this is the way it should go, ecologically speaking, in terms of incentive, in terms of money saving for the user. This is what we need to build.
Yeah, good. Yeah, it's the whole circular economy trend is encouraging and exciting. I hope it becomes kind of more mainstream because it's what we need. Very good. All right, let's talk about raising capital for this. So when you were first starting out, how did you get this thing off the ground? Did you bootstrap it? Did you raise angel money? What'd you do?
Well, at the really beginning, first you have to meet the right co-founders, right? Building a marketplace, there is only one way, which is to get a CTO co-founder if you're not a CTO yourself. And I was lucky enough to meet Q at NetEven, so the first company I was previously working on. So we got to know each other, and we were very lucky because we got to know each other through work. So we knew how to work together before creating the company. Having a CTO and a CEO, I think, is the minimal mix to start off any tech company. And that allows you to start with very low capital because you have the how with the CTO creating actually the whole system.
Yeah.
And I had the trust of my first suppliers at the beginning. And then we were lucky enough to meet our third co-founder, Vinny, who is actually entitled to create the brand experience, the C side of the marketplace, so the user experience that we're going to provide to our customers, etc. So, and as co-founders, we didn't pay ourselves at the beginning. We put it $20K within the capital of the company. And now it was enough to start to roll out the MVP and to start to feel, okay, is it going to, find some attention and are people going to consume our products?
Yeah. And
that was okay for 6 months. For the first 6 months, traction was already great and it was purely organic. Then we were in an accelerator program in Paris, and we had a lot of traction with seed VCs specialists and some business angels. And so we were lucky enough to have enough attention to choose whether to go with VC or business angel who were entrepreneurs themselves and had already some great experience within the tech space. So we decided to go with them. So that was the first seed raise. Angels.
Uh-huh.
Yeah.
What was the
500K raise?
What was the name of the accelerator in Paris?
Camping. So it's like Y Combinator for the Parisian ecosystem.
Okay, interesting. Cool. Okay, so keep going. Sorry, I didn't cut you off. So then you raised an angel round from local French.
Round. Mm-hmm. Yeah, local French entrepreneurs, the one who created the European Etsy and got acquired by Etsy at the time, and some other specialists within other retail spaces. And that was very useful because as co-founders, then you're learning your job every day. And those guys, they've already have done like several mistakes. They already knew like who were the right third-party softwares to use for payment, for logistics, etc. So their knowledge was great, really great, and really helpful to win time in execution. And this is where you can actually, at the beginning, you are fragile. You can die at any crossway. Yeah. So this money is important. You need to survive and to be able to spend a bit into marketing acquisition and stuff to grow your business. But this is even more valuable than the money, to the right advices from people who experienced already like significantly similar experience. So that was 6 months after the launch of Back Market, May 2015. That happened. And then we started to think, okay, Back Markets is great for the French market, but we're actually addressing a global problem. And so this should work and this should travel internationally speaking. So let's focus our efforts into rolling out, the platform and being, like in other countries and see like if there is a fit there as well. And so we decided to, focus all our efforts on that. And we rolled out like 4 new markets within the 12 months after the fundraise. And it was working exactly the same way than in France with good traction in different markets. And I think that's where, we started to feel, okay, this model can travel. It's not just in your mind.
Yeah.
it's traveling. It's starting to show some great signals. So let's accelerate and push it further there. And this is when the Series A came.
Okay.
And we raised $10 million at the time with our first 2 VC partners. And yeah, that was the next step. And the idea was clear. We need to keep on pushing, within those countries we just raised and try to, scale the product with some enablers that we knew that were missing because there's tons of things that we're all still missing in Back Market. at the time, and are still today actually. And then it kept on accelerating. International development was still a main focus. And today, as I'm speaking, we're in 17 markets, 3 regions. And since then, we raised the Series B of $50 million. Then we raised the Series C of $130 million. And then we raised our Series D of $330 million. And we never pivoted. We always had, the same vision. We really want to bring circular economy at scale for hardware products, extend the life of tech devices is what we do. And in order to do that, we need to build a global brand, established marketplace like Airbnb has done for the traveler. And so that requires capital.
Yeah, good. All right, let me pick apart a few of these. Let's go to the Series A. Who led that? And was that French VCs? Was that European VCs? And how did you kind of identify, was it marketplace VCs? Was it circular economy VCs? How did you identify the right people for that, right firms?
So 2 very different animals. It was led by Daphni, which is a French fund, specialized in impact funding.
Mm-hmm.
So their tagline is build a city for good. So basically they like to invest in impactful businesses. And we share the same vision in a way, there is no compromise for value. It was at the DNA of back market. The more we're growing our business, the best it is for the impact, because the more refurbished products sold, the less new products sold.
Yeah.
So they bought in for the vision, for the team, for the traction, obviously, of the business. And Aglaé Ventures, which is basically Bernard Arnault's fund, the French billionaire and the president of LVMH Group, who bought in at the same time.
Great, cool. Okay, so you stuck to French investors at the moment, and then how about Series B and Series C? Did you also continue in that same vein?
So Series B was preempted by Bernard Arnault himself. Mm-hmm. He had the numbers. We received the first offers from UK funds, first approach from US funds. And it was just so pragmatic and much faster than everyone else. And he said, okay, what value? Okay, for me, let's go. This is mine.
So they're going after you at this point. They're hearing of you. They're seeing your growth, and they're chasing you and putting a term sheet down.
Putting a first term sheet on, and their term sheet, Aglaé Ventures term sheet, was much better. And they knew, and they asked us because they were already a board member. So it was, an easy access to the next round for them. Mm-hmm. And we let Eurazeo, which is a European fund, in at the time as well.
Who led that one? Firm. Sorry, who led that one, Bernard?
Bernard Arnault with Aglaé Ventures fund.
Okay.
So his fund, basically, with his money in. And we also had Eurazeo joining, which is a European fund.
Cool. And Series C, anything notable about that? Was that another preemptive round, or?
So, no, it was different. Series C was led by Goldman Sachs.
Okay.
And at the time, we just rolled out, the back market product within the US market. We had great traction in the US, and we felt, okay, we need a US investor that's going to really help, open doors in the US and help us, scale the business there. So this is where they came and how they came into the play. I started the funding because I hate funding rounds as a CEO. It's really the worst part of my job, but I have to do it because it's necessary to, reach the vision, become the global leader, requires fundings. But the success looks like for back market being the number one in the US market, and we made the decision, okay, we need a US VC to join the capital at the time. And so I started the roadshow, going to New York, San Francisco, and talking to, let's call them the usual suspects, so all the top VC firms out there. And we had a great momentum, a great deal with Goldman Sachs, which was a very well-established brand there. They had just secured their first gross large funds of $4 billion. So they were the new joiner at Series C, which was pretty different than the previous ones.
Was that when you were doing the roadshow in New York, and were you talking to all growth stage venture funds or some private equity funds, or kind of a mix?
Kind of a mix, but mostly around growth equity funds.
Yeah.
That was the vast majority of them. Because we were like at a stage like growing at 3 digits with new markets showing some great results. So it was all about, like fueling that growth.
Yeah, makes sense.
Yeah.
What, any tips for pitching Goldman Sachs or getting to know them? Or what do they like to kind of work with? Because obviously that's a blue chip banker name. Yeah.
So any tips? Be prepared, be sharp, be straight. They like to run many analysis and kind of picture the things, picture your business growing within the next 4 or 5 years. Flip the model upside down to see if it stands, etc. So you need to be comfortable with your numbers. Basically, you need to be straight when it comes to the vision. But I think that works for any kind of growth fund. But for Goldman Sachs in particular, I think they're really into numbers.
Yeah. What does that process look like? Does that mean you're giving them your financial forecasts and they've got a couple analysts or associates kind of tweaking it and playing with it? Or are you working with them side by side and kind of coming through some stuff?
So what Series C looked like? Well, at the time, you meet all let's say we selected like 15 top VC firms in the US. I met all of them. They were all like 100% super excited after the first meeting. This is basically where you just show some slides about what you do, how did you build your model, and this is just an overview of what you're doing and where do you stand. Then there is a meeting B, and you start going deeper into the questions like marketing acquisition, structure of the supply, the product, the team, etc.
Yeah.
And this is where you start to have some drop around the people who are looking into, or sometimes they just don't follow up really, and you are not having the frequency of conversation that you are with some others that are still very, very excited by what you're doing and really want to join.
Yeah.
And then you start going into some business due diligence, So for those who want to go further, there is really like meeting the team, getting some deep analysis around your model, etc. And this is where the real connection is happening, because you really start working with the people you have around the table at that time.
Right.
Start having deep discussions around your business. You are not just talking about some concepts. You're talking with numbers. You're talking with enablers, and so it's around the depth of the market, the model itself, the risk, the product roadmap, etc. I think that's the exciting part of the fundraising. Because repeating yourself all over again for the first round is not interesting at all. Obviously, you know everything about your business, so it's more to grab the attention of a potential new joiner. And then they went, and then you jump in with the condition of the deal. Like someone's in. What's the condition that they're offering you? They're putting some term sheets, basically to join the capital of the company. And then you start the negotiation, and you just go for what you think is the best fit for the company in terms of course, in terms of cultural fit with the fund, but also in terms of basic terms, let's say, so money, dilution, and all the terms that you can find in term sheet that will actually be the basis of the terms linking you with the new shareholder.
Yeah, good. Yeah, interesting. Any advice for founders that might be going through this on terms to watch out for, or terms that you are most, concerned about, right?
Okay, so I'm going to speak about my personal case, because I think it's very personal for every company, every founders. But for me, it's important to have someone that fully embraces the vision of the company. You don't want to have someone joining and asking to flip the model. Or saying, okay, I'm going in if and only if you pivot or you switch to that or you enable that. No, you want someone that is buying in the team, the vision, and is going to support you and help you to reach that vision as fast as possible. So for me, that's P0. And then you have the cultural fit with the team, because ultimately, it's a name, but it's someone that is going to stick around for the next 5 years or so, most of the time. So you want to have someone that you can discuss frankly with and have constructive discussions, and that you think is going to bring value to the company. And then you take a look at the financial terms, valuation, so dilution, basically. And I think, like for me, like it was very important at the beginning, like preferences, like but for now it's not anymore. For me, it's a no-brainer. It's not a point of discussion anymore. And that's the first points for me that are important. It's the top 3.
Yeah, that's good. You've raised a lot of money, like, and how do you sort of balance, like, hey, we need a lot of money to make this the global leader versus every round you take, you're getting diluted more and more and more. So do you even worry about dilution, or are you just focused on building the biggest market leader? I mean, and I guess, are there other competitors like close on your heels that are also raising a lot of money? This is a complicated question, but yeah, any comments on that?
Oh, actually, we were lucky enough to not have like direct competitors on our heels for some times, and every time there is one popping out, we just look at it and we focus on what they do, what they might do better, and we just focus on being better. So it's motivating for the team internally to just go to the next level. If they are doing a few things better, even if they are much smaller, it's not a reason not to look at it, because in the end, it's the best user experience and the best brand that will work, that will win the game, especially when you are a vertical marketplace. So that's the way we deal with copycats.
Sure. Yeah.
At back market.
Okay. And dilution, I mean, are you even concerned about dilution much, or you just...
Dilution is important. I mean, first you need to think about the company. So that company first. And so company is not about dilution. So it's not your personal dilution. It's what amount of money do you need to go all in and to really boost the company's growth to achieve its mission.
Sure.
And it's most of the time, it's not like so much more money. You know what you can do with the money, but the hard stuff within our space is more to recruit tech engineers and maintain a great culture internally in order to give ourselves the right enabler to execute than the money itself.
Right.
So, but first you need to think about the company, and so the amount of money needed is P0. What do we need to go full for the next 2-3 years? And then dilution is important in a way, because if you are max in terms of cash in already, then why raising more cash? And so at that stage, I always try to balance. Okay, so we have new joiners that don't want to be frustrated. We want them to be all in as well. Everybody needs to be happy around the table. So we need that much cash in for the company, and not let's ask to the active existing shareholders, okay, do you want to sell a bit to make some room for the new joiners? Some are no way. Some are more inclined to do so. So the earliest joiner are more inclined sometimes. And so that's, I think, a good way to make everybody happy at the end of the deal.
Okay. Two last questions. I noticed the last round you had Generation Investment Management, which is Al Gore's fund. Any tales from that? Did you get to meet him or pitch him, or anything around that?
So yeah, actually we welcomed two new joiners last round. So Gore's fund, Generation IM, and General Atlantic as well. And when it comes to Generation Investment Management, yes, I did had to 1 hour Zoom with Gore.
Cool.
And it was a great moment. I think he's a great, inspiring person who really believes, we can change things, and with a strong obsession about going to net zero, like CO2 emission, and being convinced that, it goes through creative, innovative businesses that we will reach that ambition. So yeah, for us, it was a great step, a great moment for me personally to be lucky enough to have that conversation with him, and not to have him supportive for our back market is a great asset, obviously.
That must have been exciting, just like when you're sitting there, like, I'm on Zoom, I'm pitching Al Gore right now.
Yeah.
Like that must have been a cool moment.
Yeah.
Yeah.
And another cool moment I didn't share, but I also had to, I was also lucky enough to pitch Natalie Portman for the Series C. And she was really into impact funding, and she wants to, invest our money where it can make a difference. So that was a great moment on Zoom as well.
Does she have a fund, or is it her personal angel capital?
It's her personal angel capital.
Got it. Oh, neat. Yeah. She's great. Excellent. Did she come in on the round, or did you just pitch it?
No, she didn't in the end, and she was super happy. But I think she's got that console, and it was like, okay, but this company is not making profit, so it's risky. And so
sure,
it was I think pretty far from our environments, and that's just fine. But I think she's a great person. It's great that people like her or DiCaprio or like those guys are investing in things that make sense, and this is inspiring for other people.
Yeah, it's amazing. I've watched all these celebrities, athletes get into the venture world in the past 5-10 years. It's kind of wild. It's pretty neat.
Yeah.
Okay, my last question for you is, what if you were going to rewind the clock and talk to your younger self, what tips or advice would you give your younger self if you were doing this all over again, or just any general advice you'd give other founders or French founders, if there's anything specific to being French? So open question.
First thing that I will tell myself is invest more money in experienced engineer day one.
Okay.
Because as a tech company, you start with a monolith, and so you'll keep that for your entire life until you go into microservices, etc., and you bring more agility in the end. But the best engineer that you have, and the sooner you have great engineers, the best it is for agility and fast building in the coming years. And you're paying what you haven't invested so much more after. So Series A, seed round, take a bit more money to hire top talented engineers is what I would tell myself, like really, like no doubt around that.
Most of your engineering in France, or do you have teams spread all over the place?
Most of them are in France, but we have more and more European talents. So I would say like 30% of the team is spread across Europe. We have offices, like Back Market has offices in Paris, in Bordeaux, but also in New York, in Berlin, soon to open in Tokyo as well, in Barcelona. So, and those places, we welcome engineers anywhere in the world.
Cool. Those are great places. Tokyo, neat.
Yeah.
Those are all exciting places. Okay. Any other advice or tips you would tell your younger self or other French entrepreneurs?
Go in. I mean, there is no time. And we are here to create things that add value to existing world. Life is short. So go all in, I think is what we need to do, and to create things that make sense.
Cool. Very cool. All right. Well, thank you. If people want to learn more, it's simply backmarket.com, correct?
Exactly.
Excellent. Well, I'll check it out. Anything you want to promote or plug, or should people just go and buy some refurbished electronics?
Yeah, people start buying new product. Think back market first. That would be a great first step. And then look out for us in 2022. We're coming with so many cool services to really, give to all the users what they need when they think about what should I do with my tech devices.
Yeah, cool. Buyback program and stuff like that. Cool. All right, Thibaud, thank you very much. Good luck. I like what you're doing. Keep up the good work and save us all from ourselves here.
Thank you very much for having me, and keep doing what you do as well. It's cool.
All right. Thank you, sir. Over and out.
Bye.